Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to learn that how to deal with value added tax and discounts on account receivables or when we are making any sales. So this question asked by many people as I uploaded my previous video which was on account receivable journal entries. So they were asking me to talk about something like how to deal with value added tax when the goods are returned from the clients, when the client is not paying us, how to deal with value added tax, and what are the factors involved when we are giving discounts. So let's start with our topic. So in the beginning, sold goods on credit, this is our first transaction which we should understand that when selling goods to ABC company, so the ABC company account receivable under current assets will be debit by total amount. Value added tax output, which is our liability, we need to collect from the client, which will be 150 as a 15% VAT. Sales in our profit and loss account as a revenue is equal to as credit 1000. So if you take the 15% of your sales value, that will be 150 as a VAT output, which is credit. So this total amount which is receivable from ABC company as account receivable, we have sold goods to ABC company, so we need to receive this money after some time from ABC company. Now when we are receiving funds from ABC company after 30 days maybe, we are receiving either cash, bank like check or online transfer to our account. So that account will be debit by 1150, not 1000 only or not even 150. So 1150 including the value added tax. So this tax amount we will pay to the government later on. So ABC company account receivable asset account will be credit by 1150. So their ledger account will become zero. Now let's move further. As you can see there, this is a credit sales transaction when we are selling goods on credit to any client. Now let's see when the client return us or he is not paying us, what journal entries we need to pass. In case goods return within 1 week after delivery, it happens when we are delivering the goods, we are giving a week period that if there is any defective items, the client can return us the goods within 1 week or within 2 days or 3 days. So when they are returning the goods to us back, so the sales return account in profit and loss account will be debit by 1000 because we made a sale of 1000, and value added tax output liability which is 150, and ABC company for account receivable asset will be 1150. So all the entries which we made earlier here when we were making the sales will be reversed because it is 1 week duration, and we can reverse them as a VAT output and sales return. This is the reversal entry. Now suppose in case goods return after 1 month, there was a 1 month period, and after that our client, they are going to return us the good, but it is happening very usual cases, not like from out of 100 you can say 1% people they can do this. So sales return account will debit with 1000 same. Tax expense account will be 150 because this value added tax we already have submitted to the government. So we cannot do anything about this tax which is already submitted to the government. So this 150 will be our expense in profit and loss account. So ABC company will be credit 1150. So their account will be zero because they have returned the goods to us. So we have reversal the entry that their balance will be zero. Now in case of 1 year delay in payment, the client delayed our payment for 1 year, so we need to add this balance of this client as a bad debts provision. So bad debts expense account will be debit with 1150, and provision for doubtful debt account receivable account we need to create under the current assets, 1150 will be credit. This is under the assets but in minus figure as a credit. Remember one thing, when we are making this bad debt expense, we are not going to consider value added tax in this scenario because the government is not involved in it. It was our agreement with the client that we need to collect money from the client. We have completed the sales procedure and the value added tax is payable to the government. This is their right. The further dealings, this is our issue, that either we are getting payment from the client or not. This is our issue. This is not the government issue. So the government will take the value added tax. So this bad debts will be our expense with the total amount, like 1000 and 1000, 1000 plus 150, 1150. In case of payment received after 1 year, after a few months, when we made this as a bad debt expense, we recover this money from our client. So this account which we made credit, provision for doubtful debt, we make it as a credit, we will make it debit 1150. So this account will be 0, and other income in profit and loss account will be credit, because we were not sure that this money will come to us. So we made this money as a bad debts expense. So now we recover this money. So this is our other income in profit and loss account under the revenue section. Now in case if the client didn't pay us forever, they said the client got bankrupt or he has problems, he said that he cannot pay. So provision for doubtful debt asset debit, this account will be debit as we have made here as a credit when we made it bad debts. So ABC company account receivable asset account will be credit. So now the ABC company balance will be 0. Here we did not touch ABC company because we were not sure, even maybe they will pay us or maybe they will not pay us. So here they said no, they will not pay us. So we need to decrease their ledger balance and make that balance 0. Now let's see the discount on sales. Sold goods to ABC company with 5% discount. When we are making invoice, ABC company like sales of 1000, we are calculating value added tax on this amount 1000, which is 15% 150, and we need to calculate the sales discount on this value also 1000. So 1000 multiplied by 5% discount will be 50. So the ABC company from receivable from the ABC company will be 1100. Sales discount given to the company mentioned on our invoice will be 50. VAT output liability will be credit as 150, and sales account will be credit by 1000. So discount is our issue. This is not also the governmental issue because we are the one who is giving discount. Our total sales value is 1000 and the VAT is charged on the total sales value, not after the discount. Like 1000 is the sale value, we will deduct this 50 from this sales value and then we calculate value added tax. No, this is not the practice. So the discount will be calculated on the total sales value, and also the value added tax will be calculated on the total sales value. Now when receiving funds from ABC company, cash or bank account will be debit and ABC company account receivable will be credit. In case of non-payments, in case of default, in case of making bad debts, all entries will be same as per this scenario. Discount doesn't matter, either the goods are returned, either the bad debts happen, discount doesn't matter in any case. If the goods return, the discount will be made as reversal. So this is the concept of discounts and VAT in account receivable and sale process. I hope guys you understand this concept. Please subscribe my channel as it keeps motivating me to create more videos for you. Thank you very much and goodbye.